Okay, good morning, folks, and welcome to Stock Charts today. Let's begin with Bitcoin. Bitcoin broke out here on the 3rd and failed. It failed to capitalize on that breakout and continue higher. It has since broken down below this lower band of support. It's been consolidating, and it is now leaning into pressuring lower support here at, let's call it 92.55. If we break down below and close below more significantly that support level, we're going a lot lower. So be careful here. A lot of pressure on Bitcoin. Now, RSI, we are at current trading down below the lower band of support. We have lower highs, lower lows. Be careful. Lots of pressure. Now to the dollar. Last night I spoke with members on Market Wrap about how I thought that the dollar was showing signs on a daily chart of topping out, at least on a short-term basis. That thesis had a setback last night as we made a new high for 2018, and we are now sitting with a 93 handle on the Dixie. This bar here was a bullish key reversal, meaning we pulled back, retested the support level, it held, now we have a continuation move higher. So as it stands right now, I would not be shorting the dollar, but I stand by my opinion that on a daily basis, the dollar is showing some signs of topping out on a short-term basis. So it doesn't matter where we trade intraday. What matters is where we close. In short, let's watch how the dollar closes out the day today. Let's talk about gold. Gold is in a trading range. Here's your upper band. Here's your lower band on this 4-hour chart. These are all 4-hour charts. We are down on the morning. If we break lower support, we're going down to 1,300. If we break this upper band of resistance, we're going up to, let's call it 1,327 to 1,330. But the dollar matters. We need that dollar to break to get a breakout on gold. I'll be honest with you. I think that the performance of gold and the miners in the face of a dollar that's been very strong has been pretty good. And I do not believe the signal that the market is sending us, at least in the currency market, that the Federal Reserve was dollar friendly last week. I do not believe that they were. I think they were dollar bearish. And I think that the commodity markets are validating that opinion somewhat, in that we are not breaking down in the face of a rising U.S. dollar. Yes, we're down on the session, but we're not breaking critical support. So to me, that's a tell. I'm watching gold, I'm watching silver, I'm watching the miners. The S&P futures, they were down earlier below this lower band of support. They have since rebounded some. We are very close to a breakout on the S&P, the Dow, the Russell 2000, which I favor. Now, the same reasons why I believe that the dollar should feel pressure due to the Federal Reserve statement last week is the very same reason why I believe that stocks may head higher. Now, the reason is that there will be no 4th rate hike. We'll be lucky to see 3 rate hikes in 2018. Now, the fly in the ointment for stocks anyway, and not for commodities, and certainly for the dollar, is inflation. So the S&P under some pressure this morning, holding support. So long as we hold the support level, I think that we can rally. We're very close to a breakout point. If I had to answer this question, are we breaking out or are we breaking down? I'm going to give you an answer that most traders will never, ever give you, but I'll give it to you. I don't know. The markets will let us know. The charts will let us know which way this market is going to go. And it's simple. Take your crayon out. Put your trend lines up. If we break out above this upper band of resistance and close there, guess what? Game on to the long side. If we break down, game on to the downside. But we are closer to a breakout than a breakdown on the market. The Dow Jones, very similar story on the Dow as to what you're seeing on the S&P 500. Tight consolidation. We are very close to a breakout. We're leaning into support right now. So the jury's out. The market is going to tell us probably today which way it wants to go. Now, I spoke earlier about the Russell 2000, and the Russell actually broke down below the lower band of support this morning. Now, we are rallying back. We're neutral on this 4-hour bar. It'll be interesting to see whether or not we recapture this lower band of support and close there. The Russell has been behaving better than the large caps. It's very close to a breakout. I mean, really, take a look at the weekly chart here. Here's our all-time high. Let's take our crayon out. 16.15 is the line in the sand. So a very tight consolidation here on the Russell. Again, I prefer it over the S&P, but this morning it is not behaving well. Now, if and when we do get long of the Russell, the small caps, we'll be using the TNA. This is a leveraged ETF, not for the faint of heart. It's very volatile. We want to see a breakout above resistance, and we will get long of the TNA. Members, more to come here. Now let's segue into member stock chart requests. It's where we review the symbols that our gold members submit for me to review on video. Let's get to it. AMC Entertainment Holdings, we have a daily chart. Yesterday, we managed to recapture a prior support level, and we closed there. I would not be a buyer of these shares until we broke out and above this upper band of resistance. This is not my favorite trade. A lot of overhead supply, meaning sellers waiting to get made whole. I think we can rally and probably will rally up to 2033, which was last seen back here in July of 17. We have a double bottom setup and rising RSI bullish. I would wait for the breakout above resistance before pulling the trigger. OCLR weekly chart. We have retested the lower band of support. We consolidated there for several weeks. We are now rallying, new weekly high. We could rally up to this upper band of resistance or the bare minimum to fill this gap. Now, the thing to remember here, folks, is that we have a ton of overhead supply, meaning buyers waiting to get made whole. So beware of the higher level view of the chart of OCLR. What I mean by that is stop with the 10, 15-minute charts, even daily charts. You're not getting the full picture. Pull back. Take a look at this stock's history from a higher level view using a weekly chart, a monthly chart. It tells a story. Now to the daily chart. We have RSI and Stokes, which are rising. That's all good. We have a W formation forming. We cleared the pivot point right here at 7.65. We are moving higher. The problem is, again, I have to repeat this, overhead supply. Meaning you have buyers back here that have been sitting with this losing trade on their books for quite some time now. They're not looking to make money. All they want is their money back. So the minute they get made whole, they're out. So not one of my favorite trades. We can still rally. If you have a question with regard to this trade, leave a comment in the forum. TripAdvisor, daily chart. Many of the same issues going on here that we saw with OCLR. We have a lot of overhead supply, meaning buyers looking to get made whole. Now, RSI is rising. Stokes, this is my bit of artwork here, in that what I want to see is a rollover here and a higher low put in and then a breakout above the pivot point. We're not there yet. This is on my wish list for this stock. Now, we have seen 2 consecutive days of topping action, meaning sellers moving in to sell strength. That's not good. Now, volume has been good. So what I think is going to happen here is we're going to get a pullback and a retest of this support level here. You might want to scratch the itch, put on a trade there. Where I would get aggressive is if we manage to break out and close above this upper band of resistance in blue. So members, more to come on TripAdvisor. Decker's Outdoor, daily chart. I love the setup here. We're very close to pulling the trigger. I'm going to leave a comment in the forum on Decker's. We have rising RSI and a breakout. We are in a tight consolidation, a triangle formation. We are looking for a breakout on Deckers. We flashed a bullish Q reversal yesterday. Volume could have been better. There's the fly in the ointment. There's the rub. We need volume. But the price action looks outstanding. And to be honest, the price action relative to the overall market, whether it be the S&P or the Russell 2000, has been very good. So I really like this setup here. Members, more to come. We may be long fairly soon. Netflix. We are putting in higher lows. We are very close to a breakout here on Netflix. We have the Stokes, which are putting in a higher low. Very, very bullish stuff. Same deal here on RSI. A double bottom setup and a higher low at the 50 level. Netflix looking good. We may be long fairly soon. The fly in the ointment for everything, folks, is how are the overall markets holding up. If the markets give way, we will not be executing any long trades. We'll be looking to lean into shorts. Members, we have several other positions that we're looking to put on as well to the long side. I went over them last night on Market Wrap, so go check that out. It's posted in the members area. If you're watching this on YouTube, subscribe to my channel, leave a comment, and click that bell, get notified of future videos. If you're watching this on the website, enter your email address. We hate spam too. We will send you out these videos on a daily basis, plus a couple of free trade tutorials. And if you found us through StockTwits, Twitter, Seeking Alpha, follow me there, leave a comment. Everybody have a profitable trading day, and I'll talk to you soon. Be well.